Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for September 4th, 2018. Wow, it's hard to believe we're already into September, and we're looking at a market here that is providing just kind of some challenging price action clues here. First off, let's start here with the diamonds. First off, the thing we want to recognize is that all of the major indexes are continuing in their trend. Diamonds here pulled back just a little bit, pulling back and now showing a gap down this morning of some significance. Not terrible. We're right now looking at the Dow down about 90 points this morning, gapping down. But let's keep in mind we're holding above, at least currently, we're holding above this breakout support level here and our downtrend line, which we're holding above. So nothing is terrible here yet. Nothing should be really making us fearful, but we did leave behind kind of a little confusing, candle pattern here on Friday, just showing a little bit of indecision in the diamonds. While at the same time, if we take a look at IWM was anything but indecisive, showing a new record high on Friday, moving up strongly after this little consolidation in here and pushing high. Now, that might not be that big of a surprise, just in the sense that IWM has very little risk in the whole idea of trade war, because the majority of these companies here are going to be domestic companies and not international companies facing tariff changes. So that's holding up really, really well. But this morning you can see IWM's also experiencing a little bit of a gap down this morning. Not too much, but a little bit of a pullback this morning going on. Let's take a look at the SPY. SPY also a little bit of an indecisive candle here on Friday. We at one point were pushed down here looking negative. Had a nice little strong rally at the beginning of or at the end of Friday, pushing this back into positive territory and holding up. So a little bit of indecisiveness, possibly a little bit of consolidation. And, it's not odd. In fact, it would be healthy for the SPY to pull back and test either trend or support, and prove that is a support area. As long as these areas are defended, our trend is good, everything is looking good here. So watch that carefully. One of those two could be tested and nothing changes. The market would continue to have the appearance of bullishness here in the SPY. So we want to watch that closely and just realize that a pullback or a consolidation is a healthy thing. It's the place where we can find new potential trades. So we'll want to watch that closely. But just some challenging clues here for the market today. If we look at the Qs, the Nasdaq here, Nasdaq holding up very, very strong. And although it's showing a little bit of a pullback this morning, it's not substantial considering how strong it has been. So a little bit of pullback here, not that big of surprise, and maybe just showing a little bit of consolidation. Now here's the trouble that we have. We're showing this little bit of signs of concern, little bit of indecisiveness, but I don't think we want to give up on the bulls, simply because they have shown tremendous tenacity here lately. They have really pushed and pushed hard, and I don't expect them to give up easy. So we have the potential that those bears could attack and push us lower, but we also have the possibility that those bulls will fight back hard and could eventually overwhelm those bears and push us still higher. So kind of a challenging place to be in. Now, we couple that with the potential of choppy or light volume today, or even a good part of this week, as traders are likely to have extended their Labor Day vacation into this week. We could see some of that light and choppy volume as a possibility, not a have to, but as a possibility that could also toss in a little bit of complication there. So what's a trader to do? Well, there are times when it's better to just kind of do less trading and stand aside just a little bit until clues are better developed and we have a better edge in the market. What I tend to do is to be a little bit two-sided in the market. I have some long trades and I have some short trades just because I want to have some balance just in case we could be flipping around here back and forth. So something to think about is be careful not to just put on your rose-colored glasses and never see the potential of a downside move, because that certainly is a possibility. Now, futures are being affected largely because European markets are decidedly lower this morning, pushing down. The threat of the 200 billion Chinese tariff from the U.S. is certainly there. But we also have on the bullish side the possibility that we will finish the NAFTA agreement and come to finish up the negotiations with Canada. So as we work through all of these major issues, it's hard to know how the market's going to react to it, which puts us at a distinct disadvantage as swing traders for sure, because we're put in the position of having to predict rather than just following the market. So watch that closely and be very, very careful how you trade here. Make sure you have a little bit of balance in your portfolio. If we take a look at the VIX, the VIX has been providing us just a little bit of a concern here where we're holding on to this support level. And you can see we're getting these little spike moves off of this support level, and so we're going to want to watch that fairly closely. We did get a pullback here on Friday. Obviously Thursday we rallied up fairly strongly, but we did get a pullback on Friday of last week, and this morning with a gap down open we could certainly see that reverse and start moving higher. Now if fear starts creeping in, what we want to do is just like we saw over here, we want to see this price resistance hold that fear in check, keep it from really breaking through and breaking out. If the fear starts creeping up into here, you can see how we can quickly get these big fear spikes. We don't want to see that occur. We want to see that fear remain in check. So maybe keep an eye on the VIX. Now, one thing I will mention here is the VIX is showing us the potential of a little inverted head and shoulders pattern. So watch that closely. If we really start to break, which I wouldn't be predicting is the case. Those bulls have shown lots of tenacity here, but we want to make sure and recognize the possibility that's here, that fear could start creeping in to the market. Let's also take a look at T21. 22 T21 22, that 4-week new high new low ratio, and as you can see, I plot this with just a line chart, and we have a bearish reversal zone and a bullish reversal zone. And what we've seen is we held here on Friday down here toward the middle. So no particular clues to direction here in T21-22, just simply the fact that we have the plenty of room to move up and plenty of room to move down. So we'll want to stay pretty focused on that price action. We could see a lot of swinging around, little back and forth action going on in there. So watch that close. Let's go back here and let's take a look at the economic calendar. Now, the economic calendar today, we've got 3 potential market moving reports here. One being PMI manufacturing index. The PMI is expected to show just a slight decline, nothing major here, in an overall strong manufacturing climate. The ISM manufacturing is also expected to show just a little tiny pullback, and that's actually probably helpful for the manufacturers because they were starting to experience production delays, or delivery delays, not production delays, delivery delays as a result of being so busy and so backed up. They have a fairly large backlog that they a little rest here could help them kind of catch up that backlog and get back, slowing things down just a little bit and getting back on top of where they need to be. Construction spending has been really volatile, bouncing around quite a little bit, but it's expected to move up slightly this month. So kind of keep an eye on those three things. They can move the market around today, and they all happen after the market is already open. Following that, we have 3 bond auctions, which obviously would not be expected to move the market around. Let's see. On the earnings calendar, we have about 30 companies, just over 30 companies reporting earnings today. You'll want to keep an eye on those. Nothing major that I would think would really be a market-moving earnings event today, but something to watch out for. And stay focused on is making sure you're checking those earnings reports and bouncing that against your current holdings. So with that, everyone, hey, I want to wish you all a fantastic day, and I want to wish you great profits. This is could be a challenging week. We could see a little bit of tossing about here, so watch it carefully and be a little bit careful how you approach the market. Remember, not every day has to be a day to trade if you're going to be successful in the market. As a matter of fact, I find that sometimes preserving capital is your best trade. Remember, cash is a position. And with that, everyone, I want to wish you all just that awesome day. And I hope that everyone can pack in some profits today. Take care of yourselves, and if this is the first time you've seen these videos, please do me a favor. Click that subscribe button on YouTube. Follow me button on Facebook. Click those thumbs up buttons and drop a comment. And always feel free to share these videos with any friends or family. Everyone, take care. Have an awesome day. We'll talk to you all bright and early Wednesday morning.